very strongly. We are at a critical time in the fight against the virus.
There are now more than 118,000 cases in 114 countries, and 4,291 people have lost their lives. Thousands more are fighting for their lives in hospitals. In the days and weeks ahead, we expect to see the number of cases, the number of deaths, and the number of affected countries climb even higher. WHO has been assessing this outbreak around the clock, and we're deeply concerned both by the alarming levels of spread and severity and by the alarming levels of inaction. We have therefore made the assessment that COVID-19 can be characterized as a pandemic. Pandemic is not a word to use lightly or carelessly. It's a word that, if misused, can cause unreasonable fear or unjustified acceptance that the fight is over, leading to unnecessary suffering and death.
This was an unpleasant surprise for markets and investors. So yesterday, Trump had said at that press briefing that the following day he would announce very dramatic measures to support the economy. He also talked about other relief measures, including loans to small businesses and a possible payroll tax cut. But then today, he didn't show up at the White House press briefing on the coronavirus at all. Aides say that Trump is committed to rolling out the plan, even if its substance and timing are unclear. But our reporting indicates that the legwork really wasn't ready when Trump had made that announcement yesterday. Now, today during the briefing, we did, however, hear from Vice President Mike Pence, who briefly addressed this economic plan, saying that they will be working with Democratic and Republican leadership to try to push through an economic package. But this proposal to waive payroll taxes might not get very far in Congress, given that there have been some lawmakers on both sides of the aisle that have expressed reservations. And meantime, on Tuesday, you also had the director of the U.S. CDC saying that America has lost valuable time tracking the virus and that some regions need to just focus on coping with the spread rather than trying to stop it.
Selena, what about the magnitude of policy response? We see the Italians really beginning to deliver some potential shock and awe, and also travel curbs. What's the latest there globally?
We are seeing a range of efforts, but broadly, containment efforts are ramping up around the world as the global death toll surpasses 4,000. You mentioned Italy trying to do an unprecedented nationwide lockdown. The situation has escalated very quickly there. Less than 3 weeks ago, Italy had only 17 known cases. Now infections topping 10,000. Confirmed cases in Spain have also jumped by a third. In Australia, you have seen some aggressive actions from the government. They said they will open as many as 100 pop-up respiratory clinics as part of a $2.4 billion health package to combat the coronavirus. In the U.S., cases now topping 1,000, and the U.S. seems to have shifted into a new phase of its coronavirus response. You see universities canceling classes, more cases occurring in offices and nursing homes, and local authorities are now limiting some public gatherings, including Bernie Sanders and Joe Biden saying that they've canceled planned rallies in Cleveland. But I do want to point out that meantime in China, the number of new cases continues to slow pretty dramatically, with the recent report of just 24 new cases on March 10th. And you also have Xi Jinping just visiting Wuhan, which is a strong signal that Beijing thinks the worst may be over for China.
I'd just like to get, first of all, your reaction to what the president has announced. It was not done in consultation with the Europeans. What are your thoughts?
Usually we are not in favor of a decision restricting traffic, but we understand that for exceptional reason, you make exceptional decisions. We just want, the decision makers everywhere, because the US are not the only one to have made these type of decisions. First, to comply with the WHO recommendation in this case. They recommend that these type of decisions are exceptional, proportionate, and permanently reviewed, and that they are not and they are restricted in time. And additionally, we ask decision maker, to be well aware of the economic impact this decision might trigger, because when you have no connectivity, you have no economic development, and the potential recovery that we all hope will happen after the outbreak will be slower and lower if there is no connectivity. So we have to do everything to maintain connectivity between the different parts of the world.
Mr. Dzuniak, as you say, there is going to be an economic effect. That economic effect will certainly fall on the airlines that cross the Atlantic. Do you think good airlines are going to fail as a result of what the president announced?
We hope not, but we must be aware of the negative and serious negative consequences these type of decision of restricting traffic. Again, the US have not been the only country to do it. But these decisions, they have a very strong negative impact, and especially over the Atlantic, which is usually a pretty profitable area or part of the network of the airlines. I think that those airlines which are operating over the Atlantic will survive. We anyway urge governments everywhere in North America, in the United States, but also in Europe and everywhere in the world, to engage very strong financial support plans to help the industry.
Looking at several metrics that are telling us the economy is slowly getting back on track.
Yeah, that's right. Undoubtedly, those factories and firms are slowly getting back to work, with Bloomberg Economics estimating that as of last week, as much as 80% of the economy could be running at normal capacity. But that return to work has been very patchy. You have logistics and ports that are not fully operational. There are still millions of migrant workers that have been unable to return to work or are stuck in quarantine, although the national statistics say the majority have returned. But when you look at the energy consumption, there had been early optimism from an early pickup in energy usage, but you are now seeing that start to fall again. So a closely watched indicator of electricity demand is daily coal use by the coastal power plants of 6 big utilities. That was down 18% compared to a year ago. China's oil refiners, which supply the country's transport fuels, they've also slowed their return with slower processing rates. So this all pours cold water on hopes that there would be a fast rebound in China's economy that could also potentially support falling global commodity prices.
Right. And what we're talking about when it comes to the credit markets, though, I mean, it's pretty busy when it comes to issuance as well in China, and perhaps still seeing signs of this is being insulated, this market, from this panic selling that we're seeing around the world. But there's still some risks involved there. What are you watching?
Yeah, Vaughn, that's right. China actually had its busiest month on record in its corporate debt market in February. So a lot of this optimism about Chinese policymakers providing abundant liquidity has really helped support that $4.5 trillion corporate debt market. But as you said, those underlying risks haven't changed. Leveraged borrowers, especially in the private sector, face the same pressures that drove 2 record years of defaults in 2018 and 2019. And chief Asia Pacific economist at Natixis says that even though it may look stable on the surface, there's still a strong market preference towards issuances by financial institutions and public firms, and this places even more pressure on those private firms that have been hit especially hard by the coronavirus outbreak. So if you look at the pace of delinquencies, it's running at a record pace so far this year, and there's even been increasing scrutiny around the level of state-linked firms, how much support even those state-linked firms can be expected to receive after a top business unit of a top Chinese university defaulted this quarter. In addition to that, if you take a look at the pool of stressed debt, that remains elevated this quarter. And if the value of those China dollar bonds yielding at least 15% climb past December's record high of $25.6 billion, that's going to be a big signal of expanding risk.
The system is not really geared to what we need right now, what you are asking for. That is a failing.
And a failing, yes.
It is a failing. I mean, let's admit it. The fact is, the way the system was set up is that the public health component that Dr. Redfield was talking about was a system where you put it out there in the public and a physician asks for it and you get it. The idea of anybody getting it easily, the way people in other countries are doing it, we're not set up for that. Do I think we should be? Yes, but we're not.
Clearly, things have turned here, and the World Health Organization today declaring this a pandemic. The head of the WHO also said that countries can still change the course of this pandemic through detecting, through testing, through treating, tracing, and mobilizing. Is that possible?
I do think that we're able to blunt the force of this epidemic, but it's not going to be something that we can contain. This was a virus that was not containable in the beginning. When I was on earlier, in January, we had talked about this being an animal-to-human thing. It was very limited, but we soon found out that that was wrong, and that was data coming from the Chinese that said this was an animal-to-human thing, and we really found that this could spread efficiently between human to humans. And when that happens, all bets are off, and it's not something that's containable in that sense.
Is it too late in the U.S. to avoid a situation like we're seeing in Italy?
The Italy situation is something that's very mysterious to many of us. We don't quite understand what's happening. We're hearing lots of cases, lots of severe cases, people that are burdened in hospitals, doctors really overworked and unable to do anything there to deal with to stem the tide of this. But that's very different from South Korea, where we have the most testing been done, and they don't have that response. So we really need to get data from Italy to understand what's going on. But I mean, that's really the worst case scenario is what's happening in Italy, and I think it's urgent to know what's happening there.
When do we start getting better data here, better testing here, and once we start getting that data, what becomes the reaction?
When we get more, so the testing has been a really bad problem for the United States government to get out. We're starting to finally have some capacity, but it's still very constrained and it's still very bureaucratic to get a test done if you're a doctor trying to order a test for your patient. When we get testing stood up, we'll get a better understanding of how this is spreading in our communities. We hear about these hotspots in New York and hotspots in Washington State, but there probably are many other hotspots that aren't diagnosed because this is all mixed into cold and flu season and we don't have that capacity. But once we get that, we'll know what's spreading and we'll have a better idea of the case fatality ratio. We don't know exactly where it is. You heard Dr. Fauci say 10 times worse than the seasonal flu. We'd like to get a lot of specificity on that number to be confident about it.
And we make a lot of assumptions about how the coronavirus is similar or dissimilar to the seasonal flu, one being that it might taper off once the warmer weather comes around. Is there any evidence to believe that's the case?
So you have to remember there's 4 other coronaviruses that circulate every year, and the best extrapolation we can have is that there is that seasonality from those 4 viruses, that they peak in the winter and spring and decrease their transmission during the summer. That's in temperate climates. Obviously, the southern hemisphere is going to have the opposite seasons to us. So we may see some tapering off. We don't know that for sure, but it's based on what we know about other coronaviruses.
It also looks like in warmer, we haven't really had a major sustained outbreak yet in a warm country. I mean, we do see cases in Singapore, for example, but nowhere near what we're seeing in Korea or northern Italy.
Yeah, so there is a lot of differences that you're seeing around the world, and I think that some of that might have to do with weather, but it's hard to know because testing is so scattered, so we don't know who's testing what where.
So when we talk about this idea of sort of mitigating the effects, the idea that is, as Robert Redfield pointed out, we're sort of past containment to mitigation. Is there an example we can draw from here in the U.S. as to how that sort of plays out?
Sure. So it's a 2009 H1N1 pandemic. That's something that we never tried to contain. The cases occurred in Mexico. We knew that this was not going to be containable. So we quickly moved to preparing hospitals, preparing a vaccine, getting a new antiviral emergency use authorization. We did a lot of public health communication, and we scaled up diagnostic testing. There were some places that closed schools and stopped mass gatherings. That soon went away when we found out the severity of the H1N1 pandemic. But that's the best example where there was not this emphasis on airport screening and travel bans and quarantines and self-isolation and contact tracing.
Right. We're being a lot more proactive this time around, to the point where in Washington, Democrats are calling for President Trump to declare a national emergency. What does that mean in practical terms, to declare a national emergency when it comes to treating this?
So we had a public health emergency declared a couple of weeks ago, and that's in place now. A national emergency would escalate this to a higher level. It's really never been done for an infectious disease outbreak before, and that would be more like a FEMA-type response that you see with a hurricane or a natural disaster, which would give the federal government a lot more leeway and move a lot of the bureaucracy to actually try and respond as quickly as possible. It triggers the Stafford, it may trigger the Stafford Act, which allows for reimbursement of states for certain expenses. So it's a whole host of things, but we've never seen it applied to an infectious disease outbreak before.
Right. So does that leeway and does that federal power mean anything if there's no federal leadership?
Well, we want to have a coordinated, seamless federal-state cooperation. And so far, we've had differences throughout that time. So I don't know how exactly that would change things. Hopefully, with the vice president in charge of this, we would have a better coordination and a lot more federal oversight of what's going on with guidance.
What will it take for equities to actually start going back up, or actually for markets to stabilize?
Yeah, I think markets clearly look at fiscal policy, they look at monetary policy, especially today with the ECB here in Frankfurt giving probably so far Christine Lagarde's most important press conference and decision. I think eventually what is also necessary, we need to look at the cause of this, and that's of course the coronavirus. So I think eventually you also need to see at one point in time at least that the rate of infected people is coming down. Until then, I probably expect more measures in Europe and all these countries, and that's bad news for the market. So now you get the fiscal policy probably in, but it could take some time. But eventually we need to see some clarity on the coronavirus. I think that's important.
Christian, if you look at the budget yesterday in the U.S., this was significant, and it was seen actually as a template maybe for other countries to follow suit. You had a pretty aggressive package from the central bank together with something pretty aggressive in terms of fiscal, and that did nothing for equities or markets. So is it all about the infections, or is there something at this point that central banks can do together with fiscal?
Yeah, I think they can do something together. I think what we saw yesterday in the UK, working together there makes a lot of sense. But of course, you need that from a global perspective. So I think the market was a bit underwhelmed, really, from the press conference yesterday. Much more was expected. But now the market is fearing from the politician side, they need to have a bipartisan agreement on fiscal policy. That's not there yet. So it might take some time. And that's the issue a little bit.
Christian, thank you.
And from that perspective, I would, yeah.
Well, no, continue, please. Continue.
Okay, so I think you need this bipartisan agreement. As long as this is not in place, I think the market is very worried. From the central banks, I think you would need to see a lot on liquidity. You talked about this, and that's really necessary to see that. So it's not about monetary policy only, it's about fiscal policy. And from the central banks, I would expect to see more liquidity, and that should help markets.
I think the general consensus from the economists that we've spoken to reacting to the fiscal stimulus plan is that it's enough to get us through to the first budget. What can we expect after that?
You know, we are dealing with a very significant challenge. It's a temporary challenge, but you know, obviously we don't know at this point how long this will last and what the intensity is going to be at its peak. The reason there is such volatility in markets all around the world, not just in Australia, is because the market is finding it very difficult to price the risk. So the package that we've announced today is a significant package. It represents about just under 1% of our GDP. It is designed to support business and individual Australians through this period, but also to set us up for the strongest possible recovery on the other side by providing incentives for businesses to invest now into their success post this period.
The Prime Minister was very optimistic about having a strong bounce back out of the back end of this. Do you see a V-shaped recovery?
Well, whether it's a U-shaped recovery or a V-shaped recovery as the world experienced post-SARS, what we do know is that on the other side of the bottom, there is a big line up, going up. And we, of course, want Australia to be in the best possible position to maximize the strength of the recovery on the other side. This is a very significant public health challenge with very significant economic implications for people and countries all around the world. We go into this in Australia in a comparatively strong position. We go into it in a comparatively strong economic position, having been on a 29-year continuous growth trajectory, with growth strengthening towards the end of last calendar year. And indeed, our budget position has significantly improved over the last 6 or so years. So we do have the capacity to provide that necessary support, and the package that we released today is scalable. If more is required down the track, we will be able to make those judgments as well.
You've said yourself that this is something that could see an impact going as long as 9 months from now. We've seen other economists projecting even more longer term and dire projections than that. In terms of what a potential second fiscal package would look like, this one was about 1% of GDP, so equivalent roughly in that sense to what we saw during 2008, 2009. Will a second package also be to the scale that we saw during the global financial crisis?
Well, look, I'm not going to speculate on, what we may or may not need to do down the track. Obviously, we've done as much as we believe needs to be done right now based on the information in front of us. We will continue to assess the information and the data as it comes through. And as, the situation becomes clearer in terms of the speed of the spread of the coronavirus, which we have been treating as a pandemic for a number of weeks now, and as more information about the economic impact comes to hand, we will continue to make judgments. But right now, we have put our best foot forward to support business, stay in business, to keep Australians in work, and to provide a targeted direct support to income-supported Australians, those on welfare payments.
The package is pretty heavily skewed towards the second quarter in terms of when most of the funding gets released. In your view, is that enough to avoid a recession?
Well, again, it's a package that presents about 0.9%, or just under 1% of our GDP. And in fact, up front, it's even more than that. Because, over the forward estimates, the cost is about $17.6 billion in the initial financial year, and the period thereafter it represents about 22.9 billion dollars Australians in terms of gross fiscal impact. It's a very significant package, but as I've indicated, it is scalable, and as more data and more information comes to hand, we do have the capacity to add to it if that is required.
Does this undermine the budgetary considerations for the country?
Well, this is a temporary challenge. It's a significant challenge, but it's a temporary challenge. And, what we're doing here in terms of fiscal stimulus is put forward a whole series of significant but temporary measures. We're not baking in any structural burdens on the budget. You might recall that our last budget update showed that the budget was in surplus every year of the forward estimates and over the 10-year medium-term period. We are not imposing a structural increase in payments on the budget. We are very much focused on providing